trust what you see in front of you. It was not happening by coincidence. So in terms of using the daily open candles, there's a couple of things you can do. Okay, there's a couple of things you can do. And again, Larry Williams goes on 2 different times. There's the daily open, which I believe for UK members, it's 11 p.m. But New York traders work on midnight New York. And midnight New York is 5 a.m. for the UK. I think there's 5 hours difference, dependent on obviously time difference and things like that. Now, when we see this area here, this here is all you have to do is you have to get a vertical line. And if you go into, I've actually saved this New York midnight vertical opening price. So this is my line, which indicates New York time. Now I've got this line. I'm going to go into the nearest candle. You don't have to be super precise, but this is where the open of this area happened here. So again, I've got open price, and these are key areas I'm now looking at, because where we are on a higher time frame is, you know, we know this is the daily imbalance. We know that we are looking at price coming into this 15-minute area, and we know that we're in an imbalance and things like that. What I want to see happen is us get a move under the opening price. Now, I don't even know what happened to price in the end, but I think, yeah, price made it for those highs there. And in fact, let me just get rid and find out where we actually are right now. So that's obviously where we are now. Now, this here is again, PM session trading. But what can we see that's happened? We've gone for this high here, and we're now actually at the opening price. Price has manipulated its way down, pushed higher, and come in. Now, we got in right at the low today, and this area was spoken about to whoever was on the London session stream this morning. Okay, whoever was on the London session stream this morning, it was this area here, and it was that area here on NAS. And look what happened. This does not happen for no reason. And this is all because we've gone from the daily time frame, guys. The daily time frame all the way down. And that is how it works. And you can see the manipulation down. Everyone would think, oh, this is a bearish day, clearly. No, we're waiting for time, price, New York session open. That's the accumulation. Let's go and get it. Now, you could have easily been a buyer in other areas in this on here. Let's say you missed this area here. When price starts doing certain things, there are other areas you can get in on, because we've still got targets. Now, when we look to the left, you know, the ideal target, realistically, it's not actually played out yet, but the ideal target would be these equal highs. And that was what my sort of long-term daily target actually was. But I think the reason we stopped here and went down was because we had this, again, and I'm always thinking about the news, 7 p.m. UK time, red folder, FOMC, USD news. So you can see price drove its way back down into this area here to push higher. Now, when you look at these targets, again, we're looking to the left. What's the nearest area of liquidity we can be looking for? Well, we've got this area right here. We've got these highs right here. So if we actually highlight that area there as liquidity, when you go down the time frames, you know, this is, by all means, you can use a 1 minute time frame in these areas here. So we've pretty much used it there. So this is the liquidity. Okay, this is the opening price. So we're below the opening price still. We're overall bullish from our daily areas. We want to take price higher. We've missed this trade opportunity. What can we see? We can see prices pushing higher. We can see an aggressive pull down into this imbalance. Now, you don't have to buy in here. And to be honest, I didn't buy in here. I wouldn't have really bought in here if I'd have seen it and I had have missed that. I know that some people would buy here. That's fine. Personally, for me, I like to wait for a secondary point of evidence. Now, price again pushes higher, continues structure, taking out liquidity, filling that imbalance. We've seen a move. We've seen the banks take us higher again. This time, we've been left with more imbalance right here. And we actually came down straight into the pip. Amazing price action straight on that candle there. 2 entries right there. You could be entering inside this imbalance with your stop either there or there. And all you're going to do is you're going to target that liquidity, the next point of liquidity. Again, you're in a higher time frame, 15-minute time frame. Look to the left, see where it is. Okay, it's not great risk reward, but it's 2% or 1% more than what you had before you got in the trade, compared to maybe you missed out on a 6, 7, and 8% down here. But you're 2% up. Do that once a day, 10% a week. You're going to be rich. Fine. They're fine. There's nothing wrong with these setups, because look, that's pure evidence. And it's happening about 3 o'clock, which is 10 o'clock from the New York time, which is another area that a lot of New York traders like trading in. They like to give it half an hour after volatility kicks in and they see it. And then if you want to be really, really precise, I mean, Jesus Christ, that would have been incredible. Maybe you would have been more conservative if you stopped down there. A 4-to-1. A 4-to-1. Just by that. Time and price. New York session. And these are okay to take as long as you haven't taken out the targets. So where is the realistic targets? Targets, guys, are actually more important than your entries, because you need to be clear in understanding why and where is this going? Where is this possibly going? Even if you're targeting the midnight opening price, that's fine, because price might go back into that area and just play around. It doesn't look like today we're actually going to have much going on. And, you know, we can see price obviously drop lower. And again, I don't think New York session really gave us many great entries for PM session traders on this pair. So, yeah, there wouldn't really have been anything anyway. But you can definitely take these areas. It would have been more ideal to take it down here. But taking it from here up to here is fine. Just understand where your targets are. So, you know, when we look at a higher time frame, let me just clean this up a little bit because it's getting a bit messy. Midnight opening price, get rid of that, get rid of that, get rid of that. This is going to be recorded, by the way, guys, so anything I'm deleting obviously will be shown to you. When we go back up again, we're looking at this as a target. It looks like, you know, I mean, technically, this is the funny thing. It's a bearish day at the moment. We've got another hour and 18 minutes until technically this candle actually closes. And it looks like it's still going to be a bearish day, but it's a doji candle. So it's not a lot of forceful movements to the upside have happened. Now, looking at tomorrow, if we delete everything, because when I do my analysis, I want to make sure that everything's covered. Now, there's a couple of things we can look for here. I would like to see price go higher. If I'm measuring out this imbalance again, you know, we can do a couple of things. We can see that 50% of that imbalance is actually lower. So it's worth noting 50% of that imbalance. And this is literally just looking at what we're going to do tomorrow, or hopefully do tomorrow. So there's a couple of things we could do. That's 50% of the imbalance. We've obviously got the previous day low, which is liquidity. That's fine. You know, if we go back down, we didn't see anything really until we got to that candle. Now, that 1 hour candle still hasn't been mitigated into. So that area is still my point of interest area. We've obviously got this area here. Now, price is seeming to mitigate away from that area. We can see here we've not really collected enough information to push higher, and we actually are distributing in a weird, ugly sort of way. So it might be that we have more of a bearish day and come and just attack this area here. But it'll be all about waiting to see, whatever time you are looking to trade, where are you trading? London session traders can get some incredible trades, but what I would say about London session traders is you may sometimes be part of the manipulation. So in a day like today, for example, London session traders were in here. And this was the London session right here. So you could see prices rally down. We're bullish for the day. You know, we know we're bullish for the day, but look at where price went. You could have taken some sells. They would have been slightly higher risk, but there's every chance we could have maybe got in on something on a smaller time frame. I can't really see much. There is imbalance here, so that could have been a decent looking entry. We broke structure here, wasn't too great. Price came in a little bit lower. Not really too much going on, to be completely honest. So yeah, but New York sessions when price usually goes for its intended way. And that's not to say you can't trade in here. It's just understanding market structure. Understand that this is where the target's down here. The target's that 15-minute candle that we spoke about. In terms of tomorrow, there are a couple of areas I'd like to see us get to. So I'm going to highlight this area now, the 15-minute area, which has been created from this range. You can see price come down, pushed higher, and that, but we know that's the previous day low. So are we going to take out the previous day low and then accumulate to move higher? But what we're looking for is to anticipate what we want price to do. And again, what we would like to see happen is opening price come down, manipulate, go higher, reach its targets, and close. That happens on this day, comes into some of these areas, and this is all it's about now, looking. So this is the daily time for this is daily price action. This is what's to my left before this daily area has actually happened. So we're going to open, let's say we open here. That's the opening area. And what I want to do is see manipulation down into these areas, 15-minute area maybe, and then push higher. Does that make sense, guys, from what we've spoken about so far? I know we've only done one time frame, but you can honestly get all of the information you could ever possibly want on one time frame. And if you're wondering, does this work on every single time frame? The answer is absolutely yes, it does. This works on every single time frame, every single pair, every single asset class, metal, indices, crypto, forex. It works everywhere. And all you have to do is backtest. So today, Euro was actually, I was actually looking for price to go higher, but we were looking in these areas here, I believe. I can't quite remember. Just see where we are. Yeah, that's a couple of days. I was looking for price to come in. So we've not really moved too much. But what can we see that happened? We saw price push higher and then manipulate lower. And I would just honestly backtest these areas. And what can we see actually happened? Price come in. We just about closed above that liquidity there. So we got that liquidity manipulation during London session. Price dumped to the downside. And as you can see, price is, aggressively rejecting. Now, it got that type 2 accumulation where price respects this imbalance, comes down, and then back up to this area and so on. It came back up to this area to mitigate into London. And then again, New York session, you could have been playing in here. Because look at what we can see. That's the London session high. We've taken out Asian session liquidity. If you look to the left again, 5-minute area, we've respected that area there. Aggressive break to the downside, range in market. What can we see for the New York session? Price is pushing higher, pushing a lot higher. I was actually looking for buys in here, to be completely honest, because I was looking at this London session, taking the area and all that, but it didn't happen. But again, there was no model, so that's fine. But, you could have easily been a seller in this area here. We can see price action come into this area here. Now, what else did it do? Because you don't have to be looking for session highs all the time. You can see a lot of movements. I can see if I look to the left, we have taken that high there. So we've taken liquidity. New York sessions have happened. Price is actually distributed here. Not really a lot going on, to be honest. Aggressive move lower. Now, let me ask you very, very quickly. When you see this and you see this imbalance, is there actually any need to go down a time frame at the moment? And the answer would be not really. You don't need to go down a smaller time frame. It's not the most essential thing in the world. You can quite happily take it on this 5-minute. The only reason I'm going down to a smaller time frame after seeing an aggressive move is if the 5-minute isn't showing me any imbalance. So we look here on the 15-minute. I can see this move down, for example, but it's not really showing me anything that's clean. It doesn't look great. So I can go down to a 10-minute. Again, I don't really see anything that looks great. So I can go down to a 5-minute. There we go. There it is. There it is. That's the move. Guys, if you're taking it there and your stop loss is here, I mean, even if you held it to its highest point, nearly a 5-1. Like even if you're being conservative and you got 3% today, it's 3% more than you had. You do this once a day, 5-minute time frames. Like guys, it's the opportunities are there. You can go down to a 3-minute time frame. You can see a little bit more imbalance. You can see 2 areas of imbalance. Now, even then, I would always sit there and take the first imbalance. If we see 2, I'd take the first because we can see that in this instinct, price actually came to this imbalance. But if you're looking at the highest imbalance, you run the risk of actually this imbalance working and shooting down and missing the trade. If you enter on this imbalance in here, you're going to be in the trade. You're going to have to accept some drawdown, but you are in the trade. Just put your stop above here to be safe if you want to. Because if you had your stop below there, and I've done it before and I've been burnt, you could get burnt. Just be conservative with your stop. Don't look for 1 to 10s, 1 to 7s, 1 to 6s. Be happy with a 1 to 3. Be perfectly happy with a 1 to 3. Okay, and then we can go down again. Again, we can see, how many people here are taking that imbalance up there on the 1 minute when there's loads of different imbalances, or the 2 minute. And again, the 1 minute here just looks confusing. Just looks confusing. There's not too much going on in here. But in the 5 minute, you've been presented with an opportunity. You don't have to go to a 1 minute, guys. Like, it's not going to define you. If you're sitting on the 1 minute and you're wondering why you don't see any trades, it's because you're not taking them when you should be. Hope, and this is anything to anyone that goes out there looking for 1 minute entries without seeing 5 minute entries first and things like that. Because look, I can see one here. I can see price move lower. Price comes in. It actually pushes higher. So if your stop was here, you're getting stopped out. If your stop was here, you're getting stopped out. If your stop was here, you'd have been okay. You'd have survived it. I probably would have had my stop here. I'd have been stopped out. But it's all about waiting for a 5 minute break. And then if there's only imbalance in the 1 minute, take it in the 1 minute. But the 1 minute should really be there to, give you that really nice entry. But we don't see it here. But we do see it on the 5 minute. You could see the imbalance created here. And this is the other good thing. If I get rid of that. When this has happened, the imbalance has happened. The imbalance is happening. You can identify this area here. You've got a couple of minutes. Price is probably down here for a minute or two anyway. You're not going to be rushed. You're not going to be sitting there thinking, I need to press buy or sell. I need to get in. You can literally set a limit order. This is my area. Perfect. And again, you would have missed this move if you're sitting on a 1 minute time frame or trying to follow it in here. They don't work all the time. And it's obviously clear to see that this wouldn't have worked anyway. Price would have come back in. But that's what I would do if I were you guys. Look at the 5 minute, look at the 15 minute, identify those areas, and you can be very, very profitable. So, guys, are there any questions? So what we've learned today, and has this been beneficial to you guys? Always good. Anyone else, guys? Any questions or any comments? Has it helped? Perfect. Where's EU going now? So if I was looking at EU, and again, this is all about getting rid of everything. There's no use looking on anywhere other than the daily time frame. I'm looking for a bearish day tomorrow, and and again, because what's the closest thing to me? This low. This low. That is what I want. Now you might get to London, you might wake up in London session and it will already be down there. But we just have to tackle that when we see it. But that is where I want to see price go. Now, in terms of what I want to see, I'd like to see, again, power of three. This is where let's pretend the open's here. Is price going to push higher into there maybe to eventually come lower, target the area here? Something like that. That's what I would like to see. And I'm just using the higher time frame to identify that. So already, that's my target. And I don't even need to go any lower than a 4-hour time frame. Because look, I've already found a decent area. See if we get in there. See if we distribute. There we go. Does that make sense? Who was it asked? Daniela, I think. On S&P, would you not rather it move up first, take liquidity, and then move lower into imbalance? Let's have a look. If it happens, so you saying would you rather it come higher and then come lower? So I'm bullish at the moment on this. I'm still bullish, and I will decide tomorrow whether or not if I'm going to change to bearish just by looking at price action. And I usually use London session to work out, because usually London session creates the swing, the fake manipulation swing. So if London session starts pushing lower, it might mean that we're going to have a bit of manipulation. If it starts pushing higher, it might mean that we're going to be, in for a bullish day, but price coming back down, taking these lows first. We just have to wait and see. So I'm not marrying a bias to go bullish. It's just at the moment I'm still bullish because I've not been told otherwise. I've not been told any of it. So guys, unless there's any other questions, I will leave it there. This will be uploaded and recorded. This will be recorded and uploaded, put on the course. This is typically for premium members, but because we're open to all members, I'll put it on that course as well to the guys that are on that course. So yeah, give me a day or so to get that on for you. If anyone has any questions, please let me go. Please let me know. Please let me know. Hang on, a couple of questions. Is New York universal? Yes, typically it can be. Is there any trading books you would recommend? There is a training Audible that I'd recommend. It's nothing to do with trading. It's to do with the mindset of trading, which is the best book I've read. It's is it Michael Douglas or Mark Douglas? Can't remember his name. He's got a YouTube series as well. I'll send you the link in the Discord. I'll put it in there. But there's a book I love, which is called Relentless, which isn't to do with anything about trading, but it's just because honestly, guys, it's not about the skill. The skill, I've taught you the skill tonight. Like this lesson is giving you enough to go on and do some amazing things, especially with the others that all of you got access to in that course, learning about what liquidity is, the fundamentals, the candles, the order blocks, the FU candles, the manipulation, the market structure. Now, in what else you've learned tonight, that you're going to get there. You're going to learn the skill. The course gives you the skill. What you need is the right mindset. You need a psychological readiness to go and do it and not be afraid to lose. Once you do that, I promise you, you'll be successful. I promise you. Okay. So guys, on that note, I'll let you all go. Have a great evening, morning, afternoon, wherever you are in the world. And as always, guys, if you need anything, please let me know in the Discord. I will chat to you all in that Discord. And yeah, I'll speak to you soon. Take care, guys.